Elon Musk's $26 billion pay package, the highest-paid CEO in history. Elon Musk has once again claimed the title of the highest-paid CEO in history, with a jaw-dropping compensation package of $29 billion. This remarkable deal with Tesla, the electric vehicle giant valued at $970 billion, comes after a Delaware judge annulled Musk's previous mega-grant, not once, but twice. For the past 7 years, Musk's pay has been embroiled in legal disputes, but now he stands to benefit significantly from this new arrangement. In a letter to shareholders, Tesla's board chair Robin Denholm, along with director Kathleen Wilson-Thompson, emphasized the necessity of retaining exceptional talent like Musk. They noted, "It is crucial to keep our extraordinary talent motivated, starting with Elon." The competition for talent in the AI sector is heating up, with recent months witnessing multi-billion-dollar acquisitions and hefty compensation packages for individual AI engineers who are not founders. The board members asserted that even among this elite group, no one matches Musk. Therefore, this nearly $30 billion award is deemed vital for ensuring Musk's focus on Tesla and for attracting new talent to maintain the company's edge in AI, robotics, and robotaxis. Unlike Musk's previous compensation plan, which was contingent on achieving significant shareholder value milestones, the new agreement requires him to simply remain with Tesla as CEO or in a senior executive role for the next 2 years. Additionally, he must hold onto the stock until 2030, which will increase his ownership stake from approximately 13% to 15%. Brian Dunn, a seasoned compensation expert and director at the Institute for Compensation Studies at Cornell University, remarked that Musk's new award resembles what some refer to as fog the mirror grants. He explained, "If you're present and can still fog a mirror, you qualify for these grants. They lack performance targets." While the award will be issued in restricted shares, Musk is required to pay $23.34 per share to acquire the stock, which is the same strike price as his options from 2018. Given that Tesla stock is currently trading above $300 per share, this arrangement provides Musk with about $280 per share in intrinsic value, a situation some compensation experts have labeled as discounted options. Larry Cunningham, director of the University of Delaware's Weinberg Center for Corporate Governance, stated that regardless of how the award is categorized for accounting or tax purposes, it can be simply described as a deep-in-the-money stock option grant, awarded solely for retention. Musk's new pay package has a guaranteed floor of $26 billion. This package establishes what Eric Hoffman, from Variant Advisors, describes as a floor and ceiling structure directly linked to the ongoing litigation in Delaware, which Tesla is appealing. If the courts invalidate Musk's original 2018 award of 303 million stock options again, he will retain the new 96 million shares, valued at around $29 billion at the current stock price. However, if any portion of the original grant is reinstated, the new award will be adjusted downward accordingly. As Hoffman explained, there's a clause that states no double dipping. This 96 million share award could be utilized to compensate for any part of the original grant if he loses in the legal proceedings. Hoffman noted that the path the Tesla board is navigating is unprecedented in the realm of executive compensation. "There's no established playbook for this situation," he said. Having analyzed the award's terms, they issued the first grant. It was overturned by a judge. They proposed another grant, which shareholders approved, and then that was also put on hold. To provide context, a shareholder challenge regarding Musk's 2018 pay package resulted in a landmark ruling that rescinded his compensation. Subsequently, the Tesla board presented the pay plan to shareholders in 2024 for a vote, which they approved. Last December, the same judge, Delaware Court Chancellor Kathleen McCormick, declined to overturn her earlier decision, which Tesla has since appealed. In their communication to investors, the board acknowledged the uncertainty surrounding the court's timeline for a ruling and characterized this award as a first step, a good faith payment to Elon. However, Tesla's performance in 2025 starkly contrasts with that of 2018, when Musk was first granted his ambitious Moonshot Award. Following that award, he managed to increase Tesla's value 12-fold, with its market capitalization exceeding $1 trillion in October 2021 and again in May 2025. Yet Tesla has faced challenges recently, with its share price declining over 18% year-to-date. Musk's political activities, including his support for President Donald Trump, have also alienated some of Tesla's environmentally conscious consumer base, particularly in California. This time, the board has taken significant steps to mitigate risks. In May, they established a substantial legal barrier that complicates any challenges to this award. Following McCormick's ruling, Tesla shareholders approved a transition from being incorporated in Delaware to Texas. In May, Texas revised its business code, and Tesla promptly updated its bylaws. This amendment introduced a new requirement that any shareholder wishing to contest Musk's pay in court must hold at least 3% of Tesla's stock, a stake valued at over $3 billion. John Coffey, a law professor at Columbia University, explained, "The central theme here is that Tesla has shifted its jurisdiction from Delaware to Texas, meaning that the legality of Tesla's actions and Musk's compensation will now be evaluated under Texas law, which is generally more lenient. Tesla may face lawsuits, but the odds are more favorable for them in Texas." Texas has actively promoted itself as a business-friendly state following Tesla's relocation. It remains uncertain how Texas courts would handle any legal challenges. Cunningham remarked, "It would be intriguing to see if a Texas court opts to follow Delaware's analytical framework or chooses to avoid similar judicial scrutiny. The outcome could significantly impact how other companies assess the advantages of Delaware versus Texas as their corporate domicile." Investors have had varied reactions to Musk's compensation. Tesla boasts a dedicated base of retail investors, many of whom support Musk and have voted in favor of his compensation plan on 2 occasions, securing majority approval. Conversely, some pension fund leaders managing retiree assets invested in Tesla stock have expressed dissatisfaction with Musk's new compensation package. New York City Comptroller Brad Lander criticized the $29 billion compensation for any CEO, especially one who has been largely absent from daily operations while sales and stock values have not met investor expectations, calling it obscene. Lander accused Tesla's board of enriching Musk at the expense of investors, stating once again, Illinois State Treasurer Michael Frerichs described the $29 billion compensation package as egregious on its face. He added, "Given Elon Musk's lack of attention to Tesla's daily operations and the company's disappointing stock performance, this package indicates a board that is out of touch with its responsibilities to investors. With revenues falling short of expectations, the board should prioritize long-term planning for the company's success over appeasing a greedy CEO. Shareholders deserve better corporate governance." The SOC Investment Group, representing a coalition of investors holding nearly 8 million shares in Tesla, stated that the announcement included a notable admission from the board. They remarked, "Even an additional $24 billion in equity might not be enough to persuade Elon Musk to remain for another 2 years, let alone ensure he dedicates sufficient time and effort to reversing the current decline in sales." Tesla awards Elon Musk $29 billion in shares amid legal battle over pay package. In a bold move that has sent ripples through the business world, Tesla's board has bestowed upon CEO Elon Musk an interim pay package consisting of a staggering 96 million shares, valued at approximately $29 billion. This announcement, detailed in a recent filing, comes amidst the ongoing legal saga surrounding Musk's 2018 compensation package, which was valued at $56 billion when it vested. But here's where it gets controversial. The new package will only vest in 2 years, provided Musk remains in his current executive role. However, should the legal dispute over the 2018 compensation conclude in Musk's favor, allowing him to exercise shares from that package, the latest award will be forfeited. And this is the part most people miss. Tesla's stock surged by over 2% on the day of the announcement, reflecting the market's reaction to this significant development. In January, the Delaware Chancellor, Kathleen McCormick, upheld her ruling in the Tornetta versus Musk case, which deemed Musk's 2018 CEO compensation plan as improperly granted. The court's decision hinged on the board's failure to disclose crucial information to shareholders before seeking their approval for the 2018 plan. In response, Musk launched an anti-Delaware campaign, relocating Tesla's incorporation to Texas, and a company appealed the Tornetta decision, which is now under review by the Delaware State Supreme Court. Musk's level of control over Tesla, where he owns approximately 13% of the outstanding shares, has been a recurring topic of discussion among shareholders and online forums. In January 2024, Musk threatened to develop AI and robotics products independently, unless he gained a 25% voting control over Tesla. He expressed his discomfort with Tesla's leadership in AI and robotics, without a significant say in the company's direction. Public records reveal that Musk had already established an AI business, xAI, in March 2023, unbeknownst to Tesla's shareholders. This AI startup, now the parent of X, is working on AI products and data infrastructure, integrating its Grok chatbot into Tesla's electric vehicles. Musk's new interim CEO pay plan was greenlit by a special committee of Tesla's board, comprising board chair Robin Denholm and director Kathleen Wilson-Thompson. The plan does not restrict Musk's entrepreneurial ventures or his involvement in political activities. Last year, Musk took a hiatus from Tesla to support President Donald Trump's re-election campaign, and subsequently served as a special government employee leading DOGE, an initiative aimed at streamlining federal agencies. However, Musk's association with the Trump administration has sparked a consumer backlash against Tesla, negatively impacting its EV sales and brand reputation in the US and Europe. Following a public disagreement with Trump, Musk announced the formation of a new political party last month. In July, Tesla reported a weak earnings performance, with sales declining for the second consecutive quarter and automotive revenue dropping by 16%. During an analyst call, Musk acknowledged the impending loss of EV tax credits as a significant challenge for the company. "We might face a few rough quarters," Musk conceded, though he did not confirm that such a scenario was inevitable. Tesla is scheduled to convene its next annual shareholder meeting in November. To keep you engaged, here's a video where Musk boasts about Tesla's ambitious robotaxi plans. Musk boasts about Tesla's robotaxi plans. https://www.cnbc.com/video. To learn more about Tesla's ambitious robotaxi plans, https. Musk boasts about Tesla's ambitious robotaxi plans, https://www.cnbc.com/video. What are your thoughts on Musk's compensation and Tesla's future? Let us know in the comments below. Tesla board approves $23.7 billion stock award for Elon Musk. In a bold move that captures the high-stakes nature of the electric vehicle industry, Tesla's board of directors has approved an astonishing $23.7 billion stock award for its CEO, Elon Musk, in an effort to keep him deeply committed to the company's future. This decision marks one of the largest stock grants ever given to an individual, underscoring how crucial Musk's leadership is considered for Tesla's ongoing journey. Here's the background. Tesla, the groundbreaking automaker driving the global shift toward electric vehicles, is facing challenges that test its resilience and innovation. Recognizing this, the board has decided to grant Musk a staggering 96 million new shares, which he is eligible to claim after 2 years. This award is designed as a powerful incentive for Musk to stay focused on steering Tesla through the competitive and rapidly evolving automotive landscape. But here's where it gets controversial. Elon Musk has not received a traditional salary or pay package since a court struck down his previous $50 billion stock option plan in 2024. That earlier package was intended to reward him for Tesla's growth, but was rejected by the court, leaving Musk without a formal compensation structure. This latest award steps in to fill that void, though it still hinges on the court, potentially overturning his prior grant. To put it simply for those new to the topic, stock awards are essentially company shares given to executives as part of their pay, aligning their financial interests with the company's success. In Musk's case, it's an immense portion of Tesla's ownership, making him not only the CEO, but a principal shareholder motivated to boost Tesla's value. The magnitude of this stock grant raises important questions about executive compensation. Is this level of reward justified given Tesla's challenges, or does it reflect a concentration of power and wealth that could spark debate? What do you think about such enormous incentives tied to company performance? Are they a necessary push for innovation, or are they excessive? Share your thoughts below. The conversation around executive pay and corporate governance is far from settled.